Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about Accenture. So let's go ahead and begin in today with the daily stock analysis. Thank you for joining us today. And if this is your first time to join, go over and hit the like button. Go ahead and hit the subscribe button because there's lots of good information that I post on a regular basis. Actually, if you go and you look at the YouTube channel today, I posted an update that gave you a little bit of information on what an investment moat is. Some people call it an economic moat. As we begin into today, what I want to do is I want to also remind you that this program is brought to you by my financial planning firm, which is Richards Financial Planning. And if you need help with your financial planning, if you need a financial plan, if you're frustrated with the direction of your finances, go over to richardsfinancialplanning.com and learn about the prosperous planning process. I think that you'll be well rewarded with that information. Now, today, the information that I'm bringing to you is a viewer's choice. I had one viewer that wrote into me and said, why don't you ever cover any companies that are in Europe? So that's what we're doing today. We're going to cover Accenture. Now, Accenture, though, is like many of the other companies that we've had before. They sometimes can be supporting roles in the portfolios that I help people with. Now, remember, I've talked about the hair and the tortoise portfolio. The portfolio, the Accenture, is really, it's a sideline player. It's not one of the primary hares or one of the primary tortoises, but the hare and the tortoise, remember, goes on this premise. Tortoise portfolios have strong balance sheets, whereas the hare investments are more aggressive. They have more potential for return, but they also have a greater risk. And that leads me to always emphasize to you that the past performance is not going to be a guarantee of what the future results is going to be. Now, Accenture is one of those companies that a lot of people may be familiar with the name of, but they're just not really sure what that company does. So let's take a look a little bit at the company. Now, if you look through this, I want to go through some of the earnings and everything, but just to accentuate, today's close was up. Most of the day it was down. And I think a lot of that was because of some profit taking was taking place because of their earnings call that happened yesterday, which you're going to see is actually really pretty good. But they ended today up about 0.67%, and that's actually pretty good. Accenture in itself had $11.8 billion in total revenue. Their strengths are digital, cloud, and security, and they really emphasize the United States and in Europe, even though they're an Irish company. Their primary focus is in strategy and consulting. But as we look at this $172 billion company, let's pull apart their finances just a little bit and keep in mind this. We're always looking at the stability, the earnings, and the competitiveness of every company that we're analyzing to try to determine if they will fit into our portfolio or not. Now, I mentioned at the very beginning that if you want to know more about what a moat is, go over and look at my YouTube channel at Richards Financial Planning, and you're going to find a short 20-second video that's going to explain a little bit more about what a moat is. But in general, the moat is something that Warren Buffett has popularized. It's the barrier that's in between a company and its competitors. Now, what's the big wide moat that goes on that exists with Accenture? The biggest moat characteristic that they have is their intangible assets, and it's their reputation. Their name means a lot, and it takes them a long ways. If you look at their website, you'll see that they're really buying into that idea, and they're trying to build the fact that they are economically into the environment. They're into environmental conservation. They're into social justice, and they're trying to build that in with their reputation, with their name, because that's the big thing that we have to look at. But that's going to be a bearish aspect that we're going to talk about a little bit at the very end today too. Now, another wide moat characteristic is the switching cost. Companies just really that use Accenture don't want to switch because what Accenture does, it actually is so sensitive to the operations of the company as an IT consultant that it can really interrupt with the flow of how an operation works. The other thing is they have a size advantage that they can take on basically just about any operation that's out there. Now, as I mentioned, their earnings call was just yesterday, and the information that I'm going to show to you is going to be narrowed down just a little bit. I'm going to talk more about the past quarter, and it gets a little bit confusing because their fiscal year actually starts in September and the first quarter ended at the end of November. So when I talk about the first quarter of 2021, what I'm talking about is the quarter that ended in November. The revenues that they had for that particular quarter were $11.8 billion, which is up 4%. Now, when I'm telling you some of these numbers, the 4% is in US dollars, but a lot of the percentage numbers and everything are based on their local currency in Ireland. So you have to keep that in mind too. Their North American business was up 4%. Their European business was down 1%, and their growth markets were really up about 3%. Now, when we pull apart the earnings just a little bit more, we see that their operating margin is really pretty good. It increased just a little bit, about 0.5%, not a whole lot of a bump in there. As far as their bookings, their new business, this is really a big benefit for this company right now coming out of the coronavirus pandemic, which I hope we are. It was up 25% for the past quarter, which is really a big bump. That's what made the stock jump after the earnings call. Today, there were some sell-off during the day, but right before the close, it ended up in general. Now, the earnings over the past quarter, the last fiscal quarter, were $2.17 per share, and that's up about 8%. When we look at what they've done at the graph, now for those of you who are just listening to this, what I've put on the screen now is a representation that shows the quarterly earnings, the estimated and the actual paid earnings back all the way to 2015. And it's interesting because if I were to describe this graph to you, it's kind of almost like a stair step. It goes up a little bit in a jagged number, but it continues. It has a tendency to continue to go up. Every single quarter, well, I won't say every single quarter. If you went back to 2018, they had a few quarters where they were underneath their estimates. But in recent quarters, every single quarter has been above what the estimate is. Of course, I have to take into consideration that one big blip that happened in February. Can anybody tell me what happened there? I'm not sure what happened, but I lost all of you for just a moment. So let me go ahead and share my screen back with you, and I can pick back up where we left off and keep going. As I was talking about the earnings as we're going through this, Accenture's earnings have done actually pretty well. And, you know, their $2.17 earning that was 8% up over top of the past quarter, which is kind of the icing on the cake for the past year. Now, one big thing that Accenture really they accentuate, let's say, is going to be the fact that they do pay dividends. It's 1.33%. Now, remember, on all this stuff, the past performance is not going to be a guarantee of future results. Now, let's go back and actually see what the price of this did. Over the past year, a year ago, it was $202.51. And then today, when I did this around noontime, it's around 260.43. As I mentioned, though, before, that today it ended at 266.25. But really for the whole year, it's been up about 28 to 29%. Now, if we stretch the perspective back, we can see that Accenture started in 2017, 3 years ago, at 144.85. With today's close, that really means that over the past 3 years, it's had 115.58% increase. That's a 21.6 APR. So that's been really pretty good. Now let's look and see what some of the bulls and the bears are saying about this particular stock. One of the biggest advantages that goes on that happens, that keeps business coming in the door for Accenture, is complexity. It's like the clients that I have retirement plans, and I help them with it. Anytime there's regulation, I'll say, hey, that just keeps me and makes me important because I know what's going on and I can help you with it. Now, that goes back to this too. The complexity of technology is what makes Accenture important because companies want somebody that's an expert that can help deal with those aspects. And that's a big advantage for a company like Accenture. Another thing is going to be that they have automation of certain processes. The company is actually, this is a part which I think that they don't look for the aspect. I keep wanting to saying accentuate, which really it is. They don't accentuate it enough. And that is that they have about 5,000 patents that are for processes. They call them accelerators. And they really don't emphasize that. And if they did, I think that that would actually add to the characteristics of their moat in essence. Now, their business diversification is really good too, because if you look back even at the short video that I showed you in the very beginning, they serve a lot of different businesses. Now, as I've mentioned before, everything's never perfect with every company. Some of the various aspects of this is that reputations are very fragile. It's a very fragile cornerstone. Go back and look at Equifax. What happened to Equifax's share price when they had a security breach? And even more recently, go back and look at what's going on right now with SolarWinds in Austin. SolarWinds is a cloud-based company. And because of the infiltration that they had with their update and the problems that that's posed to a lot of government entities, their share price is down about 36%. One bad reputation faux pas can really hurt a company. And if a company like Accenture is only riding their reputation, that's a precarious ride. I personally think that they would do better if they emphasized some of those 5,000 patents they have for accelerators. Another thing is going to be that they are relying upon outsourced services for the different cloud services. So as they resort back to using outside services, sometimes those outside services end up being the companies that employers end up using. In other words, they go back to the company, the outsourced company that ends up becoming the competition. Okay, let's go now and let's look at actually what the competition is as we go forward. Accenture in itself, if you look at the spaghetti graph that I've thrown up on the screen now, you can see that Accenture is really not on top over the past year. I was quite surprised by this because Infosys, which is a company in India, is actually outperforming Accenture over the past year. And Cognizant is another company that in recent months is performing better than Accenture. Capgemini is a French company that is right along with it, but it's not outperforming it, but it's right with it. And then last but not least, I keep cheering them on because they've been around so long, and that is IBM. But remember, the past performance of any of these things is not going to be a guarantee of what the future results is. As we look at the close today, now I have 263.57 as the current price up here. That was around noontime. The fair market value that Morningstar has put on Accenture is around $200 a share, and that's actually increased a little bit. But still, that shows that this company's trading above actually what they think their fair market rating is. Now, not all companies, if I can spit it out there, not all companies are saying that this is a buy. Out of 24 analysts that are following Accenture, you'll see that 13 of them are a strong buy, 2 of them are moderate, 8 are saying this is a hold, and you've got 1 that's a moderate sell. There's no strong sells that are out there. Now, let's look more specifically at which companies are saying what. The most conservative numbers that are out there right now are coming from Piper Sandler. Piper Sandler is putting a price range on this company, on Accenture in between 210 and 282. Remember, today it closed at 266. So there's some room to grow, let's say, on their top number. Citigroup, on the other hand, is the most aggressive, the most optimistic, we could say, they have a top price target number on this stock of $303. So there's a lot of room to grow. Now, one of the last things that I wanted to bring up to you is a graph that shows the fair price and the market price. This is something that's put out by Morningstar. And if you look at the graph that I've put up here, the red line is the fair market price. Now, Morningstar, like a lot of the other analysts are out there, they have different methods of calculating what a fair price is going to be. It might be a multiple of earnings. It might be a multiple of EBITDA. It just depends, a multiple of sales, and sometimes it can change. But in general, if you're looking at the graph that's in front of you, you'll see that most of the time, the actual value on Accenture is over top of what the fair market value is. It went below it back at the beginning of the year when we had the coronavirus market crash, but it's a little bit higher than normal right now. They're looking at the fair market value around $200 a share, where today it closed at $266.25. So just keep this in mind as you look at any of these stocks, and if you're trying to determine if it's going to fit into your personal investment portfolio, keep in mind, is it a stable company? And one of the biggest drawbacks to Accenture that I see is really going to be the fragility of their name. They have a good name. They have a good reputation. Don't take me wrong on that. But any time that I'm looking at an investment that's the primary moat characteristic of that investment, it can make some questions come up. And really, that's why this stock is more what I would call a sideline player in the hair portfolio. The other thing is the earnings. And actually, this is a bonus because the earnings have done exceptionally well. That's what's really moved this stock's value ahead. And as far as competitiveness go, Infosys is ahead of them. Cognizant is a little bit ahead of them. But the other companies that are out there, they're right along with the pack. So they are very competitive as far as a IT technology company and a consultant goes. So hopefully, friends, that gives you a little bit of information that will help you to determine which stocks, or if this stock is a good stock for you. Now, today was a viewer's choice. So if you have a stock that you would like to learn a little bit more about, I can't do all of your requests, but please feel free to come over to YouTube and write me a note. Let me know where you're from. That'll help me out just a little bit. And if there is a particular stock that you would like me to review, and I'll pick a day that'll be a viewer's choice day like today, and I'll try to help you out. So thank you very much. I hope everybody's got great plans for Christmas and that they've got great plans for the weekend. Christmas is still a little ways off. So thank you very much for coming out today and watching, and everybody have a good weekend.